Hey everyone, Apple reported quarterly financial results that have the stock price up as much as 10% in the after hours following the release of the news. Now, I'll review those numbers in this video here. I'll also update my recommendation for Apple stock. Coming into the quarter, I did recommend buying Apple stock. I had Apple stock rated as a buy. You're going to want to tune in to see if I'm changing that recommendation. So let's jump right in. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Alright, so like I highlighted, I did have Apple stock rated as a buy. I recently updated that on April 23rd, telling investors even though the company is struggling with sales growth, it's still trading at a relatively cheap valuation given its history of ability to innovate, strong profit margins, the growth of the services segment, the billions of Apple devices in the ecosystem, all of which led me to recommend as a buy even with struggling sales growth. So as the company reported sales, they also reported saying this: given our confidence in Apple's future and the value we see in our stock, our board has authorized an additional $110 billion of share buybacks, and we're raising our quarterly dividend for the 12th year in a row. This is the news that sent the stock price up. It's now up 8.45% in the aftermarket hours. It wasn't the numbers. It wasn't the sales and profits and cash flow that sent the stock price up. It was the announcement of the share buyback, over 100 billion in share buyback. And that's a big difference from companies and CEOs that just go out and talk about how they think their shares are undervalued versus a company that goes out and spends or goes out and authorizes a $110 billion war chest to buy back their shares. That's really stating confidence in your company's valuation and your company's prospects. Now, I highlighted that sales growth is struggling in the latest quarter, which ended March 30th, 2024. Apple's sales fell from 94.8 billion down to 90.73 billion. Still, the company managed to increase its gross profit despite falling sales. Gross margin increased from 49.976 billion up to 42.271 billion. And the majority reason for that is that despite falling product sales, the services segment increased, and the services segment is way more profitable than the product segment. You can see here product sales at 66.8 billion with product cost of sales at 42.4 billion, whereas services sales at 23.8 billion and cost of sales of only 6 billion. The services segment more than twice as profitable on a gross profit margin basis compared to the product segment. In fact, year over year, the services segment saw the revenue increase by 3 billion from 23 to 23.8 billion, up from 20.9 billion. But despite the services revenue increasing by 3 billion, the cost of services revenue actually decreased to 6.058 billion from 6.065 billion. Truly impressive to add $3 billion in incremental revenue and at the same time keep the cost of goods sold at the same level. That's what Apple does. That's how Apple's been innovating recently, is incrementally, marginally, no big step forward. And that's kind of what the bears have been arguing about against investing in Apple stock, is they haven't really had any big innovative steps forward. They've just kind of been moving along step by step, very cautiously forward, adding an extra camera feature, extending the battery life, changing the design ever so slightly on the iPhones. And that's really showing up now in falling sales. People are saying, why upgrade to this next device if there isn't really that much improvement? And so Apple may need to do something bigger now that they see sales are falling, and they might just do that, right? As long as they notice that people kept buying their products more and more, they didn't feel the need to add a big step forward. They could just incrementally add and generate stronger profitability. So two things I want to talk about here is the geographic segments and product segments. So in the Americas, net sales fell to 37.2 billion from 37.7 billion. That was interesting because up until this point, they had been experiencing growth in the Americas segment. It was the Greater China segment that was falling significantly. In fact, that continued in the latest quarter, 16.3 billion in sales in Greater China, down from 17.8 billion in the same time the previous year. But for the first 6 months of the year, sales are down much more than that. So the decrease in sales in China is slowing. That was good news. However, product-wise, the iPhone is really struggling. 51.3 billion in sales in the same quarter last year, 45.96 billion in sales in the same quarter this year. And the iPhone is the entry into the Apple ecosystem. If you buy the iPhone, you're likely to subscribe to some Apple services, including Apple Music, maybe Apple TV Plus, maybe you buy Apple Care, etc., etc. Maybe you buy things in the App Store, and then you might be more willing to buy the Apple Watch, the Apple AirPods, and more Apple products. It really gets you into the ecosystem. So with declining iPhone sales, that's really troubling for Apple's future. Thankfully, services segment continues to increase very nicely, up to 23.8 billion from 20.9 billion. And like I highlighted earlier, this segment is significantly more profitable. So this is the area you want to see growth in if you're an Apple stock investor. But at the same time, this segment cannot continue growing at these rates unless it's supported by growth in iPhone sales. Because with limited iPhone sales, eventually it'll turn out to stall the growth in services. So that's something to look out for here. All right. So you might say, well, how is Apple funding this over $100 billion share buyback program? Well, Apple has a robust balance sheet, 95 billion in longer term marketable securities. These are things like 5-year government bonds or 10-year government bonds. And then they've got 34 billion in shorter term market securities. These are things like 3-month and 6-month government bonds, and then 32 billion in cash. So in total, what is that? 66 plus 95, about 160 billion in cash-like assets that Apple can convert into cash relatively easily and use to buy back their shares. What's more, the company is still a cash-generating machine. I'm going to share that with you next. So in the 6 months that ended March 30th, Apple generated $62.585 billion. Annualized, that's roughly $125 billion in cash flow from operations Apple generates in its business. So it's got plenty of cash to support the buybacks, more than enough cash to support the buybacks. So to update my recommendation for Apple stock, it was a relatively decent quarter. The declines in sales were expected. The buyback was not expected. That was new. That was more than I thought they would do. So overall, a neutral quarter. Since I already had Apple stock rated as a buy, I didn't see anything for me to downgrade the stock. I also didn't see anything to upgrade the stock. So I'm keeping Apple stock rated here as a buy. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.